No sound? No, I cannot hear Jose. But can you hear me?
Yeah, now I can hear you.
Now
Were
I
you
can
not?
hear you.
All right. What's going
Okay.
on? Good morning. Crazy intro, bro.
Yeah. There's no copyright here. This is can AI claim copyright? I don't think so. I don't think so. So it is mine. Maybe I should claim copyright. Whoever wants to use it. But yeah,
Oh,
amateur hour. It's been
yeah,
a
hold
while
on.
since we've done this, so this is why technical difficulties here. But yeah, good morning, everyone. How has it been? And Jose, we talk once in a while, off stream.
Talk a lot, I think.
Yeah, but we don't stream that much. Although we do have a
Yeah.
double stream today on here and then for the full. So yeah, a lot to talk about. We've had Meta, Microsoft yesterday. I don't know if you looked at Lam Research, maybe not, but ASML reported the day before. So we already have some good information. We have TSMC as well. Am I related to Bruno Fernandez? Yes, I'm his dad. But yeah, what did he say? What did you make of the earnings yesterday?
Um, so I did not look at Lamb Research, just because I felt like we got a lot of the great news from TSM. I mean, they're the ones that were going to increase kind of like that cap base. Then we saw from ASML kind of some like I think they had a nice booking growth this quarter. So overall, even though I don't own Lamb Research, I didn't think they were going to say anything crazy. And we know the memory market continues to also be building capacity like no tomorrow, which Lamb Research kind of benefits from. So I'll probably look at that later. The earnings that I really focused on was Meta. I thought Meta was actually pretty strong, and it has nothing to do with the overall price. I haven't read Microsoft just yet. I've read a few tidbits here and there from Microsoft, but just Meta I think was the craziest to see that capital expenditure growth. CapEx 115 to 135 billion dollars for fiscal year 2026. And I mentioned that we were on the stream yesterday, Neo. I mentioned it like if a company that doesn't even have a cloud business needs this type of compute, how much compute does Amazon, does Microsoft, do Google, who use that compute not just for internal workloads, but for all these other companies out there that are doing what kind of compute do they really need? Yesterday's really did get me even more excited, and I can't believe I can get more excited about AI stock investing. Um, so yeah, those are my raw thoughts right there. Neil, I'll pass it back to you.
I mean, for Meta, the crazy thing. Well, crazy, not crazy. Okay, the increase in spending, but what they said afterwards is that operating margin and other profitability metrics remained strong. And for 2026, they said that operating income is going to be above the 2025 levels, despite all of the increased investing, which is crazy. it just shows how profitable the core business for Meta is already, and that AI is already delivering results for them. For
And yeah,
Microsoft,
it's also crazy, just let me jump into there. It's crazy that they did 70 billion this year in capex, right? On the top end, they're expecting 135 billion dollars on the top end, right? I think in 2-3 quarters they're going to come out and they're actually going to increase the top end a little bit more, just how they normally have done in the past few quarters. But if they increase it by just an extra 5 billion, that's 100% growth in capex. But yet the company is saying that they can do really well in earnings and better than they did this year. That is insane. That to me is crazy, and it shows you that there is an ROI for AI infrastructure right now. They are getting. I mean, I did a quick chart last night. It's like capex grew about $30 billion from a year ago. In for this, and free cash flow only took about an $8 billion hit. You're seeing revenue growth. You're seeing all this improvement thanks to this AI infrastructure. Because if not, that free cash flow hit would have been a lot higher, and probably a lot closer to that 30 billion. But yeah, sorry to interrupt you. You just got me even more excited there.
no, I mean, go ahead. I mean, I guess this is the power and the advantage that these big tech companies have. Because with smaller companies, I don't think they would have the same results. I think with Meta, I mean, you have over 3 billion users. I guess it's easier for them to start monetizing it very, very early on than if we're talking about a much smaller company out there. So, and if they see the need to increase capex, why not? Just do it, because if your capex is already so high right now, and these are the results, then imagine what they'll be doing when, 12 months from now, 24 months from now, things could get very, very exciting. Of course, there are still some people that believe or don't believe in this whole AR, VR, mixed reality type of a future. They are still very, very much focused on wearables, whether it's glasses or something else. And I do think that 5 years down the line, the tech is definitely going to be there. It's going to look like normal glasses. It's not going to weigh that much. Even today, they don't really weigh that much, but you will be able to do a hell of a lot more in the future because of all of these investments. Then as for Microsoft, and a quick thank you here to Rob, Dynamic Duo is back for now.
I
Although
got my
this
live
earnings
streaming
season,
energy. Yeah, I think during earnings season and stuff like that, my energy comes back. So as long as
yeah.
Neil will have me, I'll be back.
Yeah, I mean, I've been off a bit. I don't know, I've been sick for the last 2 weeks. It comes and goes. But this earnings season, I guess you'll see the Dynamic Duo a bit more. As for Microsoft, I mean, if you look at the results were good. Now we know that 45% of that huge RPO is OpenAI. So I guess that's one of the reasons why the market doesn't like it. And then I saw a strange reason, which again you might agree, you might need to not disagree, is the Azure growth. It was 38%. I think last quarter was 39%, and so the market is freaking out because it's 1% less than before, which is quite crazy. Although it is 1% less on a much easier year-over-year comparison. So okay, but it's still 38% year-over-year growth. So the numbers do become bigger and bigger. With Microsoft, honestly, I don't know why the market doesn't like it as much right now. PE wise, I mean, valuation wise, it's not the craziest out there either. Or it's close to 30 or something like that. The price of the stock is basically back to, actually, let me show you, because it's basically back to where it was, I think a week or two ago. Let's see. So yeah, we are. Hey, where do you go?
Like
Up.
some of the big. Did I go away? Yeah.
No, because I switched scenes, so it pushed you to the side. You're gone, but you're back. So we're basically back to where we were a week ago for Microsoft. So it's not that crazy of a reaction from the market. It's just okay. We go back here. The market probably has just some questions on that RPO, and maybe if Azure growth is not going to continue to accelerate. Although, I mean, they're still growing 38% year over year. So I don't know what the market is freaking out about. But yeah, Microsoft has been a bit disrespected recently.
And I think it's crazy, right? I mean, you mentioned prices last seen a week ago, but I think it was first seen maybe a little bit over a year ago, right, Neil? So when was the first time we saw kind of these levels of 440? But that's besides the point. The thing is, I was going to say a week ago, we didn't know that the strength continues here with the cloud business and everything else. So it's like, one might say, why didn't you just buy a week ago? I think a lot can change. I mean, if you get a lot more confirmation from earnings and you can get it at a price it was 7 days ago, but now you know a lot more about the company, a lot of less of the risk, you can see more of the growth opportunities, then I think even though it's the same price, it could be more attractive based on the data that you have. Now, based on the open AI news, I am bullish in the AI space, but if OpenAI doesn't do something, I think OpenAI has a high probability of failing. But Neil, and I think maybe that's why the market hates the RPO, but I don't think the failing happens within the next 12 to 18 months. I mean, this company is raising cash like no tomorrow. I think they're raising an extra $100 billion. I think was last reported. So OpenAI fails, but I don't think it fails yet. It doesn't fail this year, and it doesn't fail I, even next year, right? I think that so the RPO, as long as most of it is within these next few years, or these next 18 months, I wouldn't be too worried. I think OpenAI, at least for now, has the money to pay for those current RPO solutions.
Yeah, so the report was that they're raising $100 billion for 700 and something, 730 or $50 billion valuation, and it's Nvidia, Microsoft, I think Amazon are all planning to, and probably SoftBank as well, all planning to invest in that raise. But yeah, do you think that Microsoft, the market puts it also as a software name? And since software players have been absolutely crushed over the past 12 months, Microsoft also gets hit, even though the full focus is every single time on cloud, but they do have revenue coming from, of course, software solutions. Because let's be honest, Copilot, who uses Copilot exactly?
And I think that's the thing, right? I think that's the sentiment. I think Microsoft now maybe is not being correlated to software too much, Neil, but I think it's getting correlated to how Google Bard was correlated about 2-3 years ago. It's like you have this AI solution, and does anybody really use it? Are you really any good? We've kind of seen OpenAI kind of lose the edge in the optics of being a great AI company, right? I think now we're getting many people talk about Opus 4.5 for software development and software tooling, and other people talk about Gemini a lot. So it's like all these other competitors are winning. We're tying Microsoft to OpenAI. Now we're going to try Microsoft's cloud business to OpenAI as well, even though they have plenty of customers. And I think that's where that's where I would see. I think that's where more of the negative sentiment is being too tied on to a failed AI company, which I don't think is failing, but I feel like that's the market perspective, right? We're tying Microsoft to this failed AI company, even though Microsoft just recently said that they're integrating Claude into their platform. I think they have Grok into their platform, and obviously any open source you can use their platform to kind of run that infrastructure. But someone did mention an important thing, Neil. There's a difference between kind of like cloud margin and kind of like the AI infrastructure margins in that they might do with OpenAI, right? OpenAI might not use all the solutions that your typical cloud player or your typical enterprise player might use. So margins from that high RPO are probably a lot lower than what a typical enterprise player will be paying. So I wonder maybe the market is thinking a little bit about those margins that come with just kind of renting out to these massive AI labs.
Yeah, I mean, right now, if we look at margins for Microsoft, it did drop a little bit in Q4, but then again, it's usually what happens Q4, but it's still 47.1% free cash flow. As always, Q4 is the quarter where it takes a hit, but this time it is much lower than before, 7.2%. Again, increased spending. Gross profit margin also coming down to 68%. Looks drastic, but it's not that far from where it was before, 71%. Net profit margin, I assume there was a one-time impact here. And then cash from operating activity did drop in Q4, but here again, you can see Q4 is literally when it drops, but this time we are still much, much higher. So it still is an amazing company, a very, very profitable company, Microsoft. They do have the advantage of this whole bundling thing that they do, right? So I don't know how long they will be allowed to bundle every single thing that they release, but so far, I feel with all of this AI thing, like with Google, right? When they came out with Bart, I mean, it sucked, and then now they're like number one, number two, or however you want to see this. Things can move quite quickly, and of course, with platforms and companies like Microsoft, I think once you come out with an amazing solution, I think it's very easy to see the usage go up. Same with Meta AI, although they say, I don't know how many people are using it, but it's just because it's integrated, I assume, in WhatsApp and Instagram and stuff like that. But when you have the distribution, and suddenly if your product does become amazing, it's very easy for usage to go up, which is why we've seen Gemini go up in the charts drastically. I don't know if you've seen the video that came out, I think yesterday, of Chrome basically doing exactly what Perplexity and OpenAI's browser was supposed to do. Basically an agentic Chrome, which we knew was coming eventually. And it was announced yesterday. I think the rollout starts in the United States pretty soon. But yeah, whoever has the distribution and the users will win here, because even if you're a little bit late, the moment you have the same solution or better, it's just so easy. Just okay, release this to the masses, release this to the billions of users that we have, and you're done. That's it. Game over for the rest, which is an issue, because how can you build a big ecosystem that is not dominated by just a handful of companies? I don't know.
Yeah, I mean, I think with AI, you're definitely going to have very strong concentration on just a selected amount of players. Just basically on the pure amount of data that you need and the pure amount of money you need for the AI infrastructure. I think, unfortunately, AI is going to really concentrate a lot of these companies. Who knows, maybe in the future, because of AI and this heavy concentration, we do see a lot of these Mag 7s get split up into even smaller players. So that could be a thing in the future, thanks to AI. And Neil, one thing I want to say is, with a Microsoft, the one that I know uses Copilot, but also I don't know too many people in the enterprise world or your typical thing. So maybe that's where I don't have vision in. All right, but it does seem like, based on on the comments, at least enterprise and organizations, you do continue to obviously see strong usage of Microsoft Office, and Microsoft continues to integrate it there. So the enterprise is like, we have Microsoft Word, we have to use all these Copilot tools with it. So that alone is pretty much with what you were saying, right? That distribution, they have that distribution. Companies, big companies use it, so they're going to integrate it and pay for it.
Yeah, I mean, the thing here, if you're forced to use a product, then I guess you'll use it. If you work for an enterprise, it's a bit like Adobe. People say, "Oh, Adobe is expensive." Yeah, but if you are in the creative space, you are probably only using Adobe because that's what everybody in the ecosystem uses. Same with Salesforce, I guess. Forcing people to use a certain software, okay, it's great for the company because, I mean, they are just going to make more money. But at the end of the day, you would need that product to be a pretty good one. Now, with AI, I assume that making a product much better becomes easier and cheaper to operate. So we'll see. As with a lot of players out there where, okay, there is risk that AI disrupts them. We've talked about this, I think, certainly a year ago. It's like, if you are a company that sits at the top or is one of the top 3 companies out there in your industry, as long as you don't give a reason to your customers to leave your ecosystem, your platform, you'll do very well. But if you don't innovate and you don't move fast enough, then you're just giving reasons for your customers to go away and try something else. I think we've talked about it when we talked about Adobe. As long as Adobe makes sure that the Adobe ecosystem, Creative Cloud, gives the users everything they need, shouldn't really give them a reason to go and look elsewhere. But if you don't, then yeah, don't cry about losing business because you were just too slow to innovate.
And Neil, I don't want to keep pushing here on Meta, but there was something that I found interesting that they discussed was they mentioned that their AI models and recommender systems are being pushed into all three chips that they have. Right, NVIDIA, AMD, and their MTAI or IA. I forget which one. I forget which one, MTAI or IA. AI makes more sense, but regardless, they mentioned that they just recently pushed their models to workflows to work on those, and they're going to continue to develop on those. To me, I read that more of as a good signal for AMD. If you're going to continue to develop, it means you're most likely going to focus on the next generation of chips. Because if not, why would you continue to develop, right? Wouldn't you just eventually let it die down? So I thought that was a great indication. The other thing, there were recently reports that Meta might be slowing down on its own ASIC push. I think there were news about that about last week. But I think Mark, by saying that they are also focusing on the upcoming quarter to even put more workloads on their ASIC market, kind of solidified that they are going to continue with that space, and any rumors of slowdown is probably false. So I think Broadcom is the one that's in charge with Meta. So I think that could have been like a little bullish indication for Broadcom that look, Meta and some of these other players might still continue pretty strongly on their ASIC endeavors.
I mean, next week we get AMD's earnings, so that's going to be a very interesting one. Based on Intel's comments, I think AMD is probably, I mean, I don't think, I'm pretty sure that AMD beats across the board, especially with the strong CPU demand. I think it's going to be a very, very good quarter for AMD. Quickly touching on this comment because I don't see it. What's your take on the decline of Neocloud stocks even though we see high demand? I mean, I'm just showing you here a couple of names. Iron is up over the last month and so, almost double. Nebius has gone from $75 to $100. CoreWeave went from $71 to $106 in a matter of a couple of weeks. So I am not seeing a decline in Neocloud at all, or especially not over the past couple of weeks. So I don't know.
And I think most stocks are still just down from their peaks. I mean, companies like NVIDIA were at like 207 at one point, I think. A lot of companies are down from their overall peak. Maybe there was excitement in the stock market in October. So a healthy pullback, it gave opportunities for some of us. I know, Neil, both of us, I think, went pretty heavy on Neocloud players, are a mixture of the ones we're bullish on and some other companies. So I'm happy we're out of that pullback just yet. And indications from earnings just give me more data that long term, I'm excited for this market. Short term, heavily volatile market. I think we're going to continue to see crazy days on both the up and downside swing. But long term, the thesis that I think we have built on Neocloud players is pretty much intact, especially with kind of these CapEx growth and AI infrastructure compute constraints that we are continuing to hear.
Yeah, and I mean, remember, just because a stock was, or in this case, CoreWeave or Iron or Nebius or whatever, they were much higher in October, doesn't mean they should have been there to start with. Right? I think we own those names and we can say that they had nothing to do at these prices. And then, yeah, there is a healthy pullback that happened quite quickly, 50% pullback or so across the board for these names. Fine. If the thesis is still the same, you shouldn't really mind it. With Nebius, I mean, we know that Nebius and Meta have a partnership. The partnership could have been much bigger, but it just didn't have enough capacity to give them. If Nebius somehow accelerates it, the build out, I wouldn't be surprised if we see another or an expansion of that deal this year. With CoreWeave, of course, CoreWeave more related to also OpenAI and all of that. But more recently, of course, we've had the NVIDIA investing in CoreWeave $2 billion. It's not the first time that NVIDIA invests in CoreWeave. We've had also the backstop for, 2030 or something like that. $6 billion, I think it was.
Yeah, I think $6 billion. And then they have the initial investment in IPO as well.
Mm-hmm. So Plus, also Applied Digital already reported, and they talked about the delivery of X amount of megawatts. So things are moving in the right direction for these companies. Of course, at the end of the day, everybody's still wondering, okay, what's the margin going to be in the next couple of years? What's the return on investment, etc., etc. But to me, it's I mean, the message has been quite clear across the board from all of the big players. Just there is so much demand. Everybody's talking about token factories. And yeah, these companies are building token factories, and you are going to generate tokens every second, every day, for a long, I mean, for forever essentially, unless your factory is your token factory is shut down, which means your data center doesn't exist anymore. But yeah, there still is a long, long way to go. I'm not saying that these stocks should be doubling right now. No, because the build out is still happening. But in order to generate billions of dollars in revenue, you need the data centers, you need the GPU, and all of that to go online. So I'm happy we've seen it recover. I think the market will start to understand the story a bit better with Neoclouds this year, especially because I think 2025 was more about, okay, these are the grandiose plans ahead. We have connected power X amount, we have contracted power X amount, but nobody really knows what that meant a year from today. So 2026 is when you're going to see a lot of these players actually have capacity go online. You're going to see how much revenue they're going to generate. We're going to see the margins, and we're probably going to see another couple of big deals happening as well.
And Neil, I think you first, I agree, right? The last year, 2025, we saw a lot of these AI, because I mean, the AI demand really kind of started recently in 2025 when inference started to pick up so much more. Right. Obviously, AI story started in 2023. But that was mainly on training. The actual inference and all these kind of different types of solutions that we're getting didn't really start till pretty much last year, and the heavy usage of it. So that's when these companies started building a lot of this AI infrastructure. And now this year, agree with you, we're going to start to see a lot of them come online. But I think that's also the negative side of Neocloud players. Neo is the market is expecting every other week if we could. What's the new big deal? What's the new big deal? No one announced the big deal this week. That must be bearish for Neocloud players. But it takes months, quarters, years to build some of these AI infrastructure. So you're not gonna get a new announcement from every company every week, right? But as they come online this year, at least maybe in the second half, I think we're gonna get a lot of big announcements from all over, from Nebius, from Corey, from Iron. So I think that's why the volatility is there. The market sometimes is extremely impatient, but long term, I'm still super excited.
Yeah, agreed. I think people overestimate the timelines here. Just because, again, we talked about that before, just because you have X amount contracted power or connected power does not automatically mean that you're going to be generating tens of billions of dollars or so anytime soon. And yes, with the contracts, I guess with what has happened in 2025, when you did have like 2-3 months where every single player got a contract, But when you look into the details of these contracts, it's going to take a while until you're actually going to see the money flow in across the board, whether it's Core, Nebius, Iron, Hut 8, Cypher, you name it, doesn't matter. Because it's not a software contract. You're not buying here Microsoft 365. You're building a huge and complex building, and that takes time. This year, I think, is the start where a lot of these buildings partially are going to go online, and so you're going to see quite a big effect. And if some have delays, I mean, we've seen that with CoreWeave. Yes, the stock will get hit for sure. Now,
and Neil, I want to get this question here from FGM 858. I don't know if you can pull it up. They mentioned there in the corporate world, the leadership of these companies are pushing hard that employees to use AI tools in the daily basis. However, these tools are not not good at doing reasoning. I think that's going to eventually change, and I think it's also might be a problem with the user itself as you get to learn how to use them properly. Because Mark Zuckerberg, I don't know if you heard, Neil, during the earnings, he mentioned two things. First, overall engineering output, especially in software engineering, has increased 30% for the whole company. thanks to AI tools. But their power users, the ones that really know how to use the tool, their output on software solutions has increased 80%. So you're pretty much having another extra engineer on those power users. And he even mentioned there's tasks that they did this year that went from a large team to such a small team. And he believes 2026, obviously, maybe you can push the deadline, but eventually it's going to be where one single power user can create some interesting stuff for the overall company and maybe not complete the project, but have 50, 60% of the project done, a lot of the thinking done. And then the team comes in and finishes the rest so it can be more product ready. I don't think it's going to be like a one software player, but a one software player can go from like 0 to like 60%. And then you bring the team where they can go from that 60 to the 100%. So it was cool to hear those little tidbits from how engineers are using some of those solutions.
Yeah, no, I agree. I mean, employees are hesitant to use the tools in a meaningful way. I know, why would they, right? It can only help them. And of course, like you said, unless you don't know how to prompt correctly, then yes, it's going to, I guess, take a little bit more time. But engineers aren't stupid, so it's not rocket science. You talk to the AI. It's very simple. Use your words, and I fail to see how it doesn't help people across the board do work much faster, whether you're a coder or anything else. Plus, I mean, the results are there. I mean, if at Meta they're seeing a 30% improvement, so clearly something's working. So yeah.
Yeah, and someone in your community posted, executives are the worst evaluators of AI tools. And again, maybe some of these numbers might be overinflated a little bit, but I believe the trend is there. I think there is some ROI, and I don't think they're seeing 30% increase coming in out of nowhere. I don't think there's one new user software engineer that is not using AI tools and it's solely bringing the whole company up. I think it's a conservative rounded thing coming in from just overall AI tool solutions. I mean, just if a software engineer in theory is using AI to build the email that might have taken them 10 minutes, now they have an extra 10 minutes to develop more software code. That alone is a win from AI, because now you're paying that software engineer to do that actual task, opposed to doing kind of like a clerical task that you were paying them before. So that's pure efficiency gain on that alone.
Correct. I mean, both of us use AI as a content creator, financial, whatever you want to call it. It makes our life much easier. Like, we can go through earnings report, transcripts, all of that 10 times faster than before, which means we're saving time, which means either we can spend more time with our friends and family, or we can look at way more companies. So clearly something's working here. It's not always 100% accurate, but I mean, we've been reading and looking at these companies and reports for quite a while, so we can catch the mistakes. But yeah, it's clearly happening. Now, quickly going over a couple of comments here. Jobless claims, no. If you have them, let us know in the chat below, or if someone can pull it up. I am going to stream SoFi's earnings tomorrow. It's tomorrow morning. It's on a Friday. I know, very weird day to report earnings. That never happened before, but I will be streaming that. PayPal is next week, the PayPal. This thing just continues to drop like a rock. I am still holding. I don't plan on selling. I do very much hope that management did not under-deliver. I think they'll beat their own estimates, because that's what they told us, that guidance is within reach or something like that the last time they spoke. So I think that's going to be fine. But since this is the first earnings call of the year, comments on 2026 Q1, I would love it to be a bit more positive than the last time they spoke with analysts. And then, of course, the buybacks. If they didn't buy back more shares this quarter, I would be very, very disappointed. And it would be a big mistake by them. Very big mistake. But hey, we'll have to wait until Tuesday, also Tuesday morning, in order to get more information. So we'll have to wait. MasterCard did report already, or they report? Oh yeah, they did report. MasterCard says consumer is fine. Yeah, I mean, Jerome Powell said yesterday that the consumer is also okay. Consumer sentiment surveys might look negative, but he said, look, they can vote in the survey that things are bad, but then they go and spend. So the data is a bit strange there. But yeah, it seems like even the banks have said that the consumer is fine. I assume, again, with PayPal, it is a worldwide company, it's not just United States. They see quite a lot of data. Maybe the consumer on average is fine, but specific segment, income brackets, maybe there is some weakness in the lower income bracket, and PayPal can see that and get hit from that as well. So we shall see. We shall see. I do think that Q4 is going to be a beat, but let's see what happens for Q1 and especially the buyback stuff. Speaking about Benfica and Real Madrid, I mean, that ending, it's a Jose Mourinho masterclass. Love to see it. Love to see it. Jobless claims, I don't know. Jose, did you find some? I didn't even know we had numbers coming out today. Honestly, with earnings season on,
with earnings, yeah, agree.
Couldn't care less.
Normally, I could care. I don't care about it, but now with earnings, I definitely don't care about it. So nothing there. But Neo, one thing you did bring up, right, is in these surveys, just like, I mean, even for my friends, just a typical kind of small group circle, you hear a lot of complaints about everything going high in prices, but you also see them spending like crazy, right? So it's like how much information can you really get from these surveys? The sentiment might not actually represent what the consumer is still doing. They might just be like, yo, it sucks, it's heavy, but it's expensive, but I'm still out here spending on whatever people spend on.
Yeah, I mean, inflation happens, like things increase every year, but the rate of increase for now, what we've seen is lower than before. Of course, there are certain things that, if you compare it to 5 years ago, of course, they're way more expensive, but for it to become cheaper, we need deflation. And for now, maybe in certain sectors we are seeing it, but in a lot of others, not. I mean, energy prices in the US have come down quite drastically. But I guess with food and things like that, maybe not as much. But yeah, if people continue to spend, then I guess they have to spend. Again, there are things, of course, that you need to buy, such as food. But the data suggests that people keep spending. Deflation is worse than inflation. I mean, I guess it depends. Across the board, yes. But for a consumer, I don't think we'll be angry if suddenly our groceries are costing us like almost 10% less. But yes, for overall the economy, I think that's what we're seeing a bit in China, in some sectors there. It's not great. Software names. So yeah, yesterday we had, I mean, Salesforce did not report yesterday, and yet they are down 4.3%. Adobe is down 2.7%. It's mainly because ServiceNow reported yesterday, and they are down, as you can see. They are down from $129 to $121, which means they're not the lowest price since November 2023.
Oh, wow.
Yeah. Now, this was also a name that was very expensive here, at $180, $200 or so. It's very expensive. Now it's not even that cheap. It's just less expensive. It's a name that grows 20%, low 20% or so. RPO is growing faster than revenue, but the reason why Salesforce gets dragged down as well here is because of that. The market still hates software names, or the thing here, I don't think they hate it because those are bad businesses. I think they just don't want to pay a premium anymore for these businesses. I think previously they didn't mind paying, I don't know, high 20 times, maybe low 30s PE or something like that, or in this case, price to sales a bit higher for these types of names because margins are very high and they are growing. Of course, Salesforce growing 10% barely, ServiceNow doubled that rate. But now with, let's say, the AI fears, we don't know if AI is going to amplify this business or not, or going to destroy it. Then the market is like, you know what? Okay, good business, but we are not willing to pay the premium for that. And I think that's why we're seeing it drop across the board. Is it overdone? I think it is. I don't think names like Adobe or Salesforce should be trading at the multiple that they're getting right now, because still there are no signs of the business declining. They're still generating a hell of a lot of free cash flow. But yeah, I also think that this year is the year where the market figures out either you're bringing this down to zero or you're starting to buy it.
And but I think it's such a crazy thing, right? I do think it's more of a sentiment thing, right? You know, I mean, Adobe, that's the only one kind of like I know in the software space. I don't know a lot of these other ones. But Adobe is doing really well at integrating AI into its own solutions, right? And I think last quarter they mentioned that generative AI credits continue to grow and usage continues to grow. People are paying for it. They're integrating all different kinds of models. So it's moving in the right direction. But the market is scared of it because AI tools kind of have some form of generative tools within themselves. And that I wonder when the market shift is going to happen, when that sentiment shift, because AI tools are only going to get better and AI generation tools are just going to get better. So in theory, that sphere should continue to stick. It's like, what happens when OpenAI or Gemini release that you can make a 30-second video with one single prompt? Like, that is so crazy. Even though Adobe is most likely going to integrate it into their platform, the market is going to continue to say, you know what, this is going to be. So it's like, how can a shift happen when AI itself innovates so quickly and you continue to bring that fear in? But I do think a lot of these stocks, again, I don't follow it, but it's crazy the prices that they're seeing.
Yeah, I mean, again, it's up to these companies to show, I guess, that look, that our business continues to do well. Most of them are showing it exactly. Each and every quarter, it's the same thing. It's growing. It's growing. It's still profitable. Also, these businesses don't have huge capex plans, right? They don't have to build data centers, so their margins are still going to be very safe, for now, at least. But yeah, like you said, I mean, I think yesterday Grok, they announced that you can now generate 10-second videos with better sound. I still think it's quite crazy that we're still at only 10 seconds. I mean, what the heck is 10 seconds? It's nothing. But yeah, with Adobe specifically, especially since this is in the creative space, as long as they keep moving fast, they shouldn't be giving people reasons to go elsewhere.
Yeah.
You can generate images, videos inside the Adobe ecosystem and then edit it, right? Because at the end of the day, creators, especially professionals, they want control. It's great that you can prompt things, but at the end of the day, you want to be the one still editing to make sure that the sound is perfect, color codes, all of that makes sense for your brand.
And I think, you know, it's going to take a long time for us to get higher minutes or seconds in videos. And it's definitely a storage issue. I think this is, I mean, I don't really like, not a memory unit like HBM, but like a storage, like kind of like what we're seeing with SanDisk and STX, because when you're creating long-term videos, right? Let's say even anything after, every time you make the video longer, you have to remember, and I'm not saying I'm bullish on these companies, 100% not saying I'm buying any of these things, but the longer the video is, the more you need to look at the past seconds to understand what the concept is of that video for it to make sense, right? You can have a 1-minute video, but if it's not in a timeline where it makes sense, why would you want a 1-minute video? Is that even any useful? You want a 1-minute video that from start to finish has a real story that you can tell. And for you to kind of increase to that time, you need to continue to look. All right, you make the frames at 15 seconds. You have to make sure what happened in frames 1 second to 14 seconds and make sure this makes sense for this 15-second to be added. And now you continue to add and add all these other times. You have to keep going back and seeing all those frames. And I think they're crazy. I think it's like 20 frames per second. So each second you increase the amount of compute you're going to need dramatically. But I can see the excitement for some of these things, but I personally not in them. maybe I'm dumb for not being in them, especially if I just kind of explain that massive bullish case there. But it's it's crazy the amount of compute video itself is going to need.
Yeah, yeah. I mean, eventually it shouldn't be that hard for the AI to remember what has happened 10 seconds earlier, right? For the next scene to make sense. Because right now, what most creators do, right, is they create the 8 seconds, they take the last frame, and then they continue, right? And so the AI understands the last frame. Why shouldn't the AI do it automatically eventually? Instead of
Yeah,
me doing
yeah.
it
If it does that thinking, but us as a human, we're probably prompting that 8 seconds of where that story needs to go next. So we save the AI that compute needed, right? Of that first 8 seconds, we would save the last, we would give it the last frame and say what it wants to do next. But that's so we're giving it what to do next because we have internally computed what it did in the past. So we're saving it that time. So hopefully, eventually, like you mentioned, AI should be able to read it, maybe compress it, where it compresses it. Now you don't need that much compute, and then it go on from there. But that's beyond
no,
my thought. I don't know how crazy something or architecture like that. Why isn't that being done? But I
I
think it's
assume
harder.
it will
Yeah,
be done
yeah.
eventually, but like you said, I think this probably requires more compute and things like that. But yeah, eventually, why wouldn't it work if I give it like a 1 minute script? Just do the whole 1 minute instead of me doing uh, like 10 seconds of the script, another 10 seconds, another 10 seconds. I'll just give you the whole script and make it work. I don't think it should be that difficult. But then again, what do I know?
Okay, let's start an AI company. We can right now. This is the problem we fix. We'd be billionaires in no time.
No, but think about it. For a company like Adobe, for example, there are some people here asking if we use Adobe products. I have Photoshop. I mean, I have the Creative Cloud subscription. I do use Canva for simpler things. But to say that Canva is eating Adobe's lunch, I don't think it's true because Canva is not offering the whole Creative Cloud solution that Adobe is. They are definitely taking market share at the lower end of things for sure. There is Adobe Express, but I still believe that Canva is a bit better than that. What software do you use for the videos? I mean, again, we don't really edit our videos that much, so we are very, very simple creators on YouTube. But I've seen many creators on YouTube. They all use Premiere Pro. Like the biggest YouTubers are using Premiere Pro. There's definitely some people using DaVinci Resolve. I have it. It's free. It's very good. But
I use Filmora Neo for video, but again, like you mentioned, like our video editing is nothing.
minimal.
It's yeah, it's minimal at best. If you were if you were to explain our at least mine, I think mine's are even less than yours. You have some nice B-roll stuff. You have some good
Yeah, but
transitions.
at the end of the day, why like we of course we can make it very, very fancy schmancy, words flying from one side to the other, a graph popping up, jumping, and then transmissions and things like that. But for our content, I think the most important is just the value.
Yeah.
The,
Because it's time
if
sensitive, right? Ours is meant to be watched within the next 12, 24 hours, at least most of it, right? There's certain content we might do that could be watched a lot longer, but I think most usage is within a few days. If not,
Yes.
and there's no need to spend 5 hours editing this video when those 5 hours can actually do really well at providing a lot more information just with the commentary.
Yep. No, I agree. I
Yeah.
agree. I think our value is the information that we give, not really the fancy schmancy Mr. Beast type of content, the ADHD induced induced stuff. But I do think that Adobe in the future, why wouldn't they we let's say edit our video just to cut the mistakes or things like that, and then we just tell Adobe the software, put some, let's say, animations here, there, make it look a little bit better. Why shouldn't it be able to do so automatically? Like save me 5 hours times of editing. It should be feasible. Adding B-roll automatically. When you're talking, let's say, about NVIDIA and chips, okay, it automatically knows, okay, in this segment, we're going to put some B-rolls of GPUs, data centers, things like that. When we're speaking about numbers, we have some physical AI data popping on the screen. Make sure that that pops out a bit more. Why shouldn't it be able to do so? If AI is this super intelligent stuff, it should eventually be able to do so, and we're going to save quite a lot of time, and our watch time goes up drastically.
Yeah, I agree. And someone here mentioned it in the streets that we are the real ones, no editing needed. Yeah, agree. So thank you to the viewers. You guys are the real ones for not needing. You guys aren't picky. You guys just want content, commentary, and that's all you guys ask for. So appreciate it. We don't have to spend too much time editing like crazy.
Editing, yeah. Yes, I am going to go live tomorrow for SoFi. It's early. It's I don't know. It's like 7 a.m. I think Eastern or something like that. It's before the market opens, well before. Okay, Sandy, you got our attention. You know what? After 10 times of a post, clean spark power pipeline of 2.3 gigawatts and growth of 100% year over year. But I've seen the growth. It's very, very small base. So, of course, it makes sense. In talks with hyperscalers. Yeah, great. But again, the power pipeline is one thing. The GPUs are not going to magically appear out of thin air. And as we have heard, many companies talk about, the power is, as a percent of the overall spend, is very, very low.
And also just having the power there, like it's weird. I'm not trying to say like the power just comes out of under the ground, but let's just think of it kind of putting that power that's around that area into the infrastructure itself, into the power show, is a long task as well, right? Building the power show itself is crazy. So I'm neither bullish nor bearish on Clean Spark. I think a few months ago I did kind of like a roundup on all the AI players dealing. I think Clean Spark was a little bit more on the higher end of things, but it's definitely having gigawatts and power pipeline doesn't mean that your power shells are going to be built as quickly either. So it takes time to build the power shells, and then, like you mentioned, Neil, it takes time to which route are you going to be? Are you going to hosting it? Are you just going to be a power shell? If you're going to be hosting it, then you need to learn how to build AI infrastructure. You need to be able to maintain it and host it reliably, because if not, that also creates risk. Repeat 19 times. Neil. We're gonna say hello, Jose. We gotta repeat that 19 times. But overall, yeah. So, what's going on?
QNC, thank you very much for super chat. When to buy Micron again? I mean, has that ship sailed? Probably not. But then again, if I didn't own shares, that's my way now of answering questions much faster and easier. It's like, if I didn't own shares, would I be buying today? Probably not. I'm not saying it's a sell or anything. I just, you know me, I like fintech more, so I'll probably look at some undervalued fintech. Plus, it is quite oversold, Micron, right now. But yeah, I don't think there is a reason to chase it. SoFi, 1 p.m. Central European time. Yeah, so I'll probably be streaming when it gets released. I will be streaming with Tanner, Roy, and Tevis maybe. When to sell is stressful. If you are stressed, then you should probably sell. I think that's a good rule. If you don't feel comfortable owning a name anymore, I think just sell or take profits or something like that.
Yeah, I think stress is the great indicator. Stress or whatever, losing sleep, which kind of goes with stress. All that is a great indicator that either you don't own enough or you own too much. It's like, I'm stressing, I don't own enough AMD. That to me is an indicator that maybe I should increase my position a little bit just to reduce the jitters. But yeah, I mean, with Micron, a lot of these memory companies, someone that's asking, Jose, if you're bullishing on why would I buy them? I don't know. The risk to reward is just not there. I feel like it could continue to run up. I'm not bearish against them. It's just like, I don't think I will feel comfortable owning. And when I want to buy a company now, Neil, I want to own a healthy amount, right? So it's like, if I want to put 5 to 10% of my portfolio all at once, do I feel comfortable doing it now, or am I going to be losing sleep? Am I going to be regretting it? And that overall helps me determine if I even want to enter. So I think for a lot of the memory plays, while there is growth, it's I can't go out and go buy 5 to 10% of a portfolio right now. Um, because I do really want to focus on that concentration. And if I'm only buying 1 to 2% of something this big already, I don't see that being worth my time.
Yeah, fair enough. I mean, that's the answer, I guess. Every time, it's like we can like companies, that doesn't mean we should be buying, because like you said, if we are buying a company, then we would like it to have an actual impact eventually. So we would need to free up a lot of cash to make sure it makes sense. For me specifically, the new one is Netflix. I'm building that position up. Luckily for me, the stock doesn't really move much, so I have time to accumulate at in my opinion, a good price for me. But if I did not have the cash, then I would probably not have opened a position in that. I talked recently about another fintech name in Brazil, Inter, Banco Inter, which, as you can see here, I am a stock mover yet again. This thing just keeps going up, but I like it. I will follow it. If the story becomes very attractive and another name in the portfolio becomes less attractive, then it might get into the portfolio. Yes, but if not, then not. Luckily for us, we are in an earnings season, so we are going to get quite a lot of information over the next couple of days. So that's good for us. We have here some movement in the probability of a government shutdown on Saturday. As you can see, this thing jumped last week from 11% to 78, and now it dropped to 48, all the way now back to 56%. I believe Trump and Schumer were talking about making sure that part of the bill passes and then the rest is on hold. So we'll see what happens with that. If we have another government shutdown or not. We'll see. Currently, this is the way the market looks like. Before the open, Intuit is also down 4% right now. Interesting. Workday is down. Yeah, software is getting crushed again. Datadog down 4%. Workday almost 5%. Man, yeah, maybe some good deals. Yeah, Jose. Any predictions for this earnings season? Because it's fairly we're still at the start. I mean, Microsoft Meta is behind us. ASML, TSMC, but the other big ones, AMD, Google. Uber, I guess, for us as well. They're all, I think, next week, one after the other.
I mean, just a quick forecast. I think on the top level, we're going to see AI market is still in a healthy trend. Now, price reactions are going to be completely different. I mean, we see Meta up 10% and we see Microsoft down 8%. Even though I think Microsoft's earnings were pretty strong, I wouldn't be anything worried. So the price action, I think, will be swings like this. But long term, I see some of these opportunities. I am actually seeing an opportunity in Microsoft right now, right? It's I don't know. I like Microsoft at these prices. So volatility like crazy, but I think the trend is going to be bullish for long term investors. You, Neil?
Me, I think there are a lot of opportunities in this market. I've talked about it before. I think if people say, "Oh, we're at all-time highs, etc., etc.," I'm like, yeah, but if you compare it to 2021, 2022, there are a lot of opportunities in this market. There are a lot of great names, even Meta. I mean, the low 20s PE is crazy to me. There are still a lot of opportunities. I'm still expecting good earnings across the board for AMD, Alphabet, especially Uber. I think Uber will again prove that this business is an amazing business. The market will maybe just focus on the autonomous vehicle side of things, but I think the pipeline for them in 2026 is quite a good one worldwide. And so with that said,
Ding, 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 ding. Oh my goodness.
the markets are open, ladies and gentlemen. I even have here, Jose, I don't know if you've seen this before, but wait, how do I? my little gong.
That's actually pretty cool. That's actually, did you buy it for this, or you've had it for a while
No,
and
I
just never
bought this.
showed it while we
I
were
bought it. No, it arrived after you've retired.
after I retired?
It arrived after you retired. But yeah, this is not a cowbell. This is a chill environment here. All right, let's have a look at a couple of names here. I think I see more red than green for now. We have a Meta that's up 10%. And then the rest goes all the way down to just up 2%, 2.6, which is Shopify, AMD, HIMS, AST, Alibaba is up 1.5, Google 1.3, because, I mean, why not? The higher, the better for Google. SoFi is up 0.9, Uber 1.3, very nice. Root is the insurtech company, up 0.5%. Hood is flat. dLocal is up 0.4. And then, yeah, it seems like all the rest is going to be red for now. We have Salesforce that down 6.3% without even reporting. BMNR down 3.4, I assume because ETH is down. Same with Bitcoin. Iron is down 3%. I assume Iron is still a bit correlated with Bitcoin prices because the majority of their revenue is still coming from mining and not from AI cloud. Hopefully that changes pretty soon. Applied Digital is down 4.6. Let's actually look at the Neoclouds. Okay, so most Neoclouds are down, which is quite strange, right? We talked about that yesterday. The fact that CapEx is going up quite quickly. Either the market thinks that they're just going to do it on their own, which I highly doubt they will, because financial-wise, I don't think it makes sense for them. So I don't know. I don't know why all these names are down, actually, other than the first reason, which I don't think is a real reason. Do you think
I lost
it's a
my
reason?
yeah. No, sorry. I lost the tab. I was looking at some other stuff. No, I don't think it's it's a real reason, Neo. I think these Neocloud players, like we saw, Meta is increasing CapEx. They're going to do a mixture of renting stuff out and buying stuff. It's the logical sense when you're spending this type of CapEx. You don't want to go all in on one compute. You rather rent some out. You rather buy some out, and the trend continues from here on out.
Agreed. Big tech companies, we have Meta up 9, Tesla up almost 8%, or 0.7, same with Google. Apple reports later today, it's up 0.5%, and then for the rest, Amazon is down 0.2, Netflix down 1.3, Oracle 2%, because I mean, Oracle at 170, interesting, 69 now. And Microsoft is down 10% today, believe it or not. Semiconductor names are mostly green. The ones that are red are TSM, which I don't know. Okay. Marvell is down 1.7 and Intel is down 2%, but Intel was up, I think, 11% yesterday. Then as for fintech names, we have MasterCard up 2.2. They just reported, so I assume the numbers were good. SoFi is up, American Express is up, Adyen, Visa, Inter, dLocal, and Nu are all in the green. All the rest here are red. Buy now, pay later players are red. Pagaya just keeps getting hit. Dave is down 2% back to 171. Interesting. And Shift4 is back to $59. This is turning into PayPal number 2. PayPal is now at 53.8, which is also crazy. Never thought I'd see that again, but here we are. Here we are, ladies and gents. Reddit is back under 200, Jose. I think it's like the third time that we can see Reddit down under 200. Do you have any interest in these names for quick flips? I would say.
I don't know. I think lately it's I feel like a lot of the Max 7s are great for long-term investments. That I'm not looking too much for, and I guess I have too much exposure on like volatile names like CoreWeave and other ones that I don't really want to risk it even more with quick flips. But yeah, I mean, Reddit, I mean, I think we heard some great things that or AI tools continue to use and source out of Reddit. So there has to be some stronger monetization abilities coming out of there.
But less now.
Less now?
Yeah, because YouTube is taking the top spot. So us two are taking top spot.
But yeah, I mean, I'm not looking too much on any quick YOLOs like this.
Oh, fair enough.
Unless Robert is in something and you're in something, then we go all three.
Yeah, because we need to buy that house in Florida eventually. By the way, if you are in Miami at the end of February, let me know.
End of February, I have to see.
February 21, to be specific, or 20. Fort Lauderdale. I'll talk to you later. But Rubrik is down another 4.7% based on. I mean, the reason before was because Commvault, which is a so-called competitor in the space, reported yet another not great quarter and guidance, which is exactly what has happened here. 3 months ago, Commvault reported bad earnings and guidance. Rubrik did drop 11%. Then this happened. Rubrik went from $71 to $92 after a triple beat, and then all the way a retracement here. And today it's down another 4.7%. I still think Rubrik will knock it out of the park, but we still have more than a month until the earnings report. Yeah, I mean, if this thing keeps on dropping, I guess I can keep on accumulating more shares of a company that is definitely taking market share from the so-called competitor. But yeah, it seems like a reddish market right now. Any names not on the list? I don't think so. The list has become very big.
And like, I mean, market could be red, but I think as a long-term investor, Neil, right? I think commentary from yesterday, at least in the companies that were in the AI space, I wouldn't be too like worried about short-term movement. I think long-term we have everything is in line. The stars are aligning for a great year.
I agree. Great couple of years even, I think. And like we said, I think there are a lot of opportunities in the market if you are willing to hold for a longer period of time. If you're looking to flip, I assume there are definitely some flipping opportunities out there. But with earnings, as you can see with Microsoft, good earnings, stock is down. We've seen that with a SoFi before as well. Triple beat, stock is down. Will it happen again tomorrow? I don't know. But yeah, there are always opportunities in the market. And what we've seen is that a lot of great names go up without anyone talking about them. It's not because the name is popular that you have to jump in on those things. There are definitely some companies that have crushed the likes of, I don't know, of course, Amazon, because that thing just doesn't really move that much. But even an NVIDIA of the last 12 months is up, but you compare it to memory players, not up that much. But did memory players get as much attention 12 months ago? Probably not. And the list goes on. I mean, there is a big list of names that have outperformed the market quite easily, and yet they don't really get that much attention. And I think that's where you can find some good alpha. So with that said, both of us will go offline because we will have to talk again in a couple of hours.
Yeah. And I'm also still, for viewers on my side, I still do have my stream at 11. So feel free to join back at 11 for the market launch of just Q&A, and BS.
So you're doing back to back?
To back, yeah.
To back.
Yeah, because right now I'm actually about to jump into the overall community and do a live stream for an hour there on the What the Chip Happened community. So I'm just stuck.
Look at this grinder.
2026 is the year
where you retire.
Where I retire again.
All right, everyone. Thank you all for joining us on this fine Thursday morning, afternoon, evening, wherever you are. If the market goes up, great. If the market goes down, maybe there are some opportunities. Thank you all for joining. And we shall see each other in the next one. Bye-bye.